Good evening, everyone, and welcome to Heiken Ashi Systems presentation. Today, Chris and I will show you new studies for Heiken Ashi, some simple systems that both newbie traders and advanced traders can use. The first system that I will present you is based on 15-minute time frame, and the second system that I will present you is effectively 5-minute scalp swing system. Okay, it's not standard scalping system, but it's more like a scalp swing system. So today, get ready for Heiken Ashi systems, 2 new systems, and let's see how you will like it. So before we begin, as always, our standard risk disclaimer explains that online educational materials are available by Admiral Markets Estonia for a global audience. So please take into consideration that this information is not suitable for everyone. If you want to get corresponding information, you should contact your entity and globallyuse.com website for this is risky business. So this is only a personal opinion. And risk disclosure statement stating all possible risks associated with Forex market, by accepting the risk, you're also proceeding further with us. Okay? So let's start. First, we will talk simply about Heiken Ashi introduction, then we will go to Heiken Ashi benefits and Heiken Ashi system. Well, I need to say there is no holy grail, guys. How many times I need to tell you? No holy grail system. The thing is, the holy grail is your money management. That is the holy grail in Forex trading. System will give you good results. The better the ratio, win to loss ratio of a system, the better. But ultimately, you will find out yourself if you don't believe me. The biggest point in Forex trading is actually risk management. So you want to have a system that gives you profitable entries, right? Maybe the system that is good for me is not good for you, and vice versa. Maybe the system that you know a lot about, I wouldn't be able to trade successfully, right? So it depends, you know, not everything is for everyone. And the thing is, ultimately, you want the system to give you more profitable trades than losers, right? And at the top point, at the top of that is you want to know about strict money management. Without it, there is no system that will give you profitable results. Okay, that's the fact. Now, we can talk about gambling, we can talk about some different trading contests, and that is not real trading. Real trading is how banks do. Real trading is you want to be above retail traders, you want to try to trade at least on the way as institutions do, right? So you will be on your positive side. So Heiken Ashi introduction, benefits and systems. I will cut to the chase. I won't be giving you headaches with theory crafting. We will be talking about Heiken Ashi straight from the beginning. So fast, you know about it. We already did some Heiken Ashi webinars, but it's okay to actually remind you few things, and there is always new people watching our videos on YouTube, so it's good to know. Similar to Japanese candlesticks, Heiken Ashi are similar, but they are different. So they're similar simply because they show you the price, but they use different formula. Okay, so in order to use Heiken Ashi, you need to have an indicator. Now, the latest iterations on MT4 platform have Heiken Ashi indicator by default. So it's good to use, of course, we are always doing it on Admiral Markets MT4, and additionally Admiral Markets Supreme Edition will help us use additional indicators that we need. I switched personally to Admiral Markets Pivot Indicator for scalping because 1 hour pivot points are needed if you want to trade with 5-minute charts. Okay, because 5-minute usually uses a momentum from 1 hour, and thus we use 1 hour pivot points, not daily pivot points. So Heiken Ashi represent the average pace of prices. It's definitely the average pace, especially if you use Heiken Ashi smoothed. And today for this session, I prepared one strategy with Heiken Ashi smoothed, and the second strategy is Heiken Ashi normal. Okay, so you will see it. It's a bit different. Heiken Ashi smoothed is different. Then it's good to know about trending periods, and trending periods are always followed by some retracements. Heiken Ashi candles give us a good sign and good cues for those retracements. Just being color-coded candlesticks tells you that actually it's good representation of retracement, and every single retracement begins in trend. Don't forget that trend has its waves. Okay, so when trend is formed, you will see that the price, let's say, goes up. It means this is just the beginning of the trend. The trend will be confirmed when it makes a higher low and another thrust in trend direction. So this is the confirmation of trend. That is why some systems and some trading methods use so-called 1, 2, 3 pattern that is nothing more than just an N trading. Okay, it's like N. You know the word N, the letter N. Okay, something. It's not like this. It's something like this. Okay, so it represents a form of N. That N is actually 1, 2, 3 trend. Okay. Now let's do it again. Carolyn is asking, don't we need a higher high for a valid trend? Here it is. Let's say, for example, that this is an important resistance. And we have calculated that if this resistance breaks, the price will probably be in a sort of uptrend, at least on that time frame. You can always watch my analysis. I did it on pound dollar today, and I was very specific. Pound dollar can reject from and should reject from 1.3175 to 1.3885. And if 4 hour goes above 3885, we will be in a sort of uptrend leading to 1.3238. Now the point is, pound dollar is rejecting from that level, but also it still has the possibility to make so-called triple top, because at this point we have double top confirmed. Now let's say that this is important resistance, and pairs, and a pair goes like this. Okay, it rejects, right? It just simply cannot break the resistance. So we can say the price is still in downtrend. It keeps rejecting from resistance. But guys, the bigger the rejection is, maybe and usually the bigger the movement is, because if it breaks, it will collect all stops that have been found above this level, and that stop grabber will push the price up to next resistance. What usually happens is the price gets here, breaks out, but we still don't know whether we are in uptrend. If it makes a retest and another thrust, we can say now this is uptrend. This uptrend or downtrend, it doesn't matter, it's always confirmed by a breakout, pullback, continuation. Remember that, guys. How to confirm a new trend? Breakout, pullback, continuation. Now the problem might be that every trader or analyst has its own methods for defining breakout points. My points are POC. POC use supply and demand, chart candlesticks, historical price action, now moment price action, important Camarilla pivot points, EMA 89. All those things are my POC points. Other analysts or traders will use moving average or trend line. So it's different, guys. So for a trend confirmation, breakout, pullback, continuation, When this breakout point has been broken after a retest, that's BPC, breakout pullback continuation. And we can say now we are in uptrend on that particular time frame. Remember guys, even 1 minute can have its time frame. We cannot say the price is in uptrend or downtrend without stating which time frame the price is having a trend. Is it 1 minute? Is it daily? Guys, it's not the same. That is why I really hate when people, that was a common thing on Forex Factory, especially on Euro-dollar trend, when people were talking about trend all the time. Remember 2007 and 8 when price kept falling in Euro-dollar and people made money just by selling Euro-dollar. People were saying, okay, Euro-dollar is in downtrend. But how? What time frame? Okay, daily it's in downtrend, but maybe 5 minutes will be in uptrend. So it means that you can trade uptrend in 5 minutes, having and paying attention to higher time frames. Okay? What I usually do in that case, I scan 3 different time frames. I usually use 4 hour, 1 hour, 15 minutes. And I watch daily for, if I do, let's say, trading with AQ pivot points. Let's say, that is how I do it. On Camarilla, MACD, the analysis that I give you, I only watch 4 hour time frame and 1 hour time frame. Because that is mostly swing method, intraday to intraweek. On AQ, it's more like intraday scalp swings and intraday swing positions. So I'm aligning time frames. So I can advise use 4 hour time frame and lower time frames for cherry picking entries. Usually you will get in the right direction. Because you guys, you don't need to actually, you don't trade daily candles, right? You trade the lower time frames that are actually using a momentum from higher time frames. That's called a piggyback, okay? Like piggyback, it's the term. So piggyback momentum. Now let's get back to Heiken Ashi. With Heiken Ashi, you will be able to see both trending periods and both reversal periods, because candles are color coded and you will see different colors when price is going up and different colors when price is going down. You can see potentially reversal patterns, especially because Heiken Ashi candles have wicks, and those wicks are used to draw a trend lines, guys. I will show you on the second method that I will be presenting you with today. You will see how we can actually use Bollinger Band trend lines and stochastic on 5 minute time frame to trade Heiken Ashi. Now, because of the code of in Heiken Ashi candlesticks, you will see the strength and momentum. Now, if you see the candlestick that has a wick, and let's say it's completely blue, it means the trend is strong. It's bullish. If you see a candlestick that is red and has, let's say, a wick to the other side, it means the trend is to the downside. I will show you that later. Now, Heiken Ashi smoothed are a bit different, guys, because this is Heiken Ashi smoothed calculation. They use calculation of a moving average, and this is the price. So smoothed Heiken Ashi should be observed also with the price at the top or the bottom of it, because signals may be confusing. Yes, the bigger the wick, the bigger the trend. So for Heiken Ashi smoothed, it's a bit different. Okay, guys, now let's get back to live chart. This is what I was planning to do, and I won't be doing anything more on Heiken Ashi because we have already covered the subject. Now for more thorough information about Heiken Ashi, you can watch our previous webinars. So let's talk about these two systems. I will show you how to install the indicators, of course, and how to use it. Okay, guys. So first of all, we have the system that uses a couple of indicators. And mostly I've been testing the system. I've been watching the system, how actually behaves on 15 minutes and 1 hour. And the thing is, maybe for this system, I think the better time frame is 15 minutes. But we can go through both of those. But let's stick to 15 minutes at the first. So how we, oh, chart is frozen. Okay, here it shouldn't be frozen now. See, guys, we have two moving averages, and we have Heiken Ashi smoothed and MACD. Heiken Ashi smoothed is not available in MT4 by default, so if you have your own Heiken Ashi smoothed indicator, you can use it. If you don't have Heiken Ashi smoothed, then of course send me an email and I will send you as always. And now let's see. First moving average is 12. 12 exponential moving average. Okay. Second moving average is 50 simple moving average. And both use the close calculation. Next is Heiken Ashi smoothed, guys, but pay attention to these settings. 2632. Okay, so those are the settings that you should also use on your platform. 2632, okay? And final indicator here is MACD 12.26.9. It's standard MACD, one line that can be found on MT4 platform. Of course, Admiral Mark is MT4 too. And this is what I changed. I only changed colors. I like those blue-red colors when I combine it with this blue-red on Heiken Ashi. So it's, I think it looks better than default colors. Now, how you actually trade, guys? Well, this is pretty much mechanic, I can say. But we have some things, okay, that we need to watch on 4-hour time frame. Because we are using 15-minute time frame, we need to watch 4-hour time frame for a general direction. So when you see that green moving average, that is 12 EMA, broke through 50 SMA on 4-hour time frame, we can say the price is in uptrend. So guys, starting from here, we want to find long trades only. So pay attention. Now you move on to 15-minute time frame, and you need to search for entries, long entries. We will find where our long opportunity started. So here we are. How we actually find long entries? When green moving average is below blue moving average, it needs to cross with blue Heiken Ashi smoothed. When it crosses, that is your signal to go long. So the first signal has been given here. The second signal has been given here. It's blue. The third signal has been given here, historical price action. Next signal has been given here. You see, a lot of trading opportunities. Next signal has been given here, and so on and so on. So, guys, when you see that the price is in a strong trend, you will find a lot of trading opportunities. Okay, a lot of. Now, you see this, guys. I tend to avoid this signal. It's probably blue. I cannot see here, but it's probably blue Heiken Ashi. But when candle is such big, you don't trade it. You wait for the price to retrace. So ideally, it would be somewhere around here. So the first signal is here. The next signal, you see here, green goes below, then goes back above. So I would trade it probably somewhere around this region on a pullback. So you see, there is a lot of trading opportunity when pair is trending. So before you start to trade, you need to know which pairs are trending. Pound yen is trending, euro dollar now is trending to the upside, as I have presumed. So at least according to general trend calculation. So obviously, even if you use Heiken Ashi calculation and charting, you will see that by using this system, this is indeed uptrend. So you can always watch for different pairs. Mostly dollar crosses are traded, but you can also try to trade some yen crosses, such as, of course, pound yen. And now you see, starting from this point, you will be only looking for short trade opportunities. So when trend is strong, you can actually really have a huge benefit. Guys, if everything is clear, I will move on to my second system. Now, yes, I didn't explain about profits and targets. Very important. Yeah, MACD here. MACD serves as additional confirmation, guys. But how? Let's say that you want to. Now I need to plot something, and I will tell you. It's different than standard MACD usage. So first of all, we need to put Admiral Markets. It's called Admiral Markets, Admiral Pivot Points, guys. Admiral Pivots. Okay, Admiral Pivots. Here we go. Here, this is the indicator, Admiral Pivot. Time frame for this is 4 hour, because we are using 4 hour calculation here. Okay, and here it is. So 4 hour calculation. Of course, this will change every 4 hour, but because of that, it's always best to place like this. So, for example, guys, let's say that you have been in this trade here. So you went long. This will change every 4 hour, but just use it for, I will just be using it for the sake of this webinar to show you how actually you will use pivot points. So whenever you see that pivot point has been hit, you watch MACD. You need to pay attention to MACD. If MACD is rising and you have strong Heiken Ashi smoothed candlesticks, you leave the trade. Now, when Heiken Ashi smoothed start to thin, like this, start to get a little bit, how can I say, they're smaller. You see that those candlesticks are smaller compared to these ones. You need to pay attention to MACD. As soon as MACD starts to make a U-turn, you exit the trade. So your exit would effectively be here. You see, because MACD showed us a lower histogram compared to previous one. So you exit the trade. Stops are always below last obvious swing low on 15-minute time frame. So for this entry here, your stop would be below this last swing low plus 3 to 5 pips. So it's like 45 pips. Of course, pound yen will always use bigger stops than other crosses, simply because the movement is much, much stronger than other pairs. And you see here, you will exit from this part. Okay, so now this pivot points will show you real time, not history, but it doesn't matter. You can always watch it. Let's see if there is historical setting. I didn't see it, but yeah, no historical setting. So actually, it doesn't matter. So the best thing is just follow pivot points, follow these Heiken Ashi. When they start to get smaller, and the histogram is making a U-turn, you exit the trade. For example, you can also find a downtrend. Let's use, it doesn't matter, we can use a random pair, okay, or yen here, guys. So let's say you want to short it, and let's say your short was initiated here. For example, it's 4 hour downtrend, and you have initiated your short at this point, okay? Or no, it was not that point, sorry. Where was the cross? The cross happened here. So here, Okay, so last most obvious swing was definitely here. Okay, 30, so it's like 33 to 35 pip of stop loss. Okay, and now watch MACD. MACD going down, 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 down to this point. And Heiken Ashi smoothie started to be smaller, you see? So here actually you will exit. Is it a pivot point? Yes. So you might opt, guys, to scale out, put the rest to break even, and ride additional momentum. Because usually price, if it's in a strong trend, it will proceed down. So you can opt for scaling out, putting your stop loss to break even and taking small profits, and exiting at 4-hour pivot points when they are hit. So that is the first system. And the second system is using Heiken Ashi standard candlesticks. So Heiken Ashi standard candlesticks, I just changed colors, red, blue, and that is MT4 default, Admiral Markets MT4 default platform. It has Heiken Ashi here. Red, blue. Then Admiral Pivot, it should be set on 1 hour, guys. We'll be using 5 minutes for trading, 1 hour pivot points. Then bands indicator, inputs, 100. If you don't have bands, it's actually Bollinger Bands without the middle line. If you don't have it, send an email and I will send it to you. So 100 bands period, 2 deviations, colors. The first color is none. The first color is used for a middle line of Bollinger Band. The next 2 colors are, well, you can choose whatever you like. I left it on default light sea green. And finally, again, Admiral Pivot Point, 1 hour chart. Okay. Stochastic indicator, 1473 or 1437. It doesn't matter, but important, it needs to show you like this, guys. 14.3, it's D period, slowing is 7. Because effectively you will be using only 80 and 20 levels. How you actually trade this? This is a little bit more subjective. First of all, you need to use wicks. And here you will see that there are a lot of wicks when you use Heiken Ashi. This is actually both trend and counter trend system. Because you will be using 5-minute time frame, the price on 5-minute time frame will give you different trading opportunities. The first qualifier for a trade is when Heiken Ashi breaks a Bollinger Band either to the upside or to the downside. In this example, we can see that Bollinger Band has been broken to the upside. Once the Bollinger Band breaks, you need to wait for candles. Now, this is a bullish break and price started to retrace, making bearish candles. You need to connect. Okay, now this is important. You need to connect 3 most obvious lows of Heiken Ashi candlesticks. Now we can go with these, but we will be a little bit late in the trade, or we can go like this. This is the first touch, this is the second touch, and you just ray your candle. So this is it. Okay, raying the candle. Now you need to wait when the price will break it. Here you need a confirmation. Stochastic above 80, pointing down. Definitely here. You see here, stochastic was at 80. It's going down. It should never be here, because if it's close to 20, you don't trade. And here is your trade. Now you will use Admiral pivot points, hourly pivot points for that. Okay, here the price broke down. Now this is most obvious trend line, 1 to 3 touch. Where is the price? Let's check it. Here you see close to 20, so you take a long trade. Okay, here again a trend line. Okay, we can use this one. It broke out back into Bollinger Bands. Can we trade here? Well, it's a bit, now this is subjective. You can try to trade, but it would be much better if the stochastic were close to 80 or above 80. So maybe a no-no trade. It's actually around 50. Okay, another trade. Well, this is now, I don't like to see these candles. This is, I never like to trade on these candles, so wait for another opportunity. Here, another break. Let's see, do we have a trade here? Here, guys, well, a bit of, you see, the price will probably make you a couple of pips, but when you see that the price cannot get to the lower levels, that means cannot break these lines for a couple of times, it's best to take a small profit. Okay, best to take a small profit. Because the price needs, actually, you see here, breakout again. Here, guys, now this is actually, let's see here, break, here, this, no, not an entry, not an entry. Actually, the entry was here. Because you have a lot of trend lines here. See, 1, 2, 3, 4 touches, and here it goes. Here is your trading opportunity, and stochastic were at 80. So, well, you see, guys, this is scalping system. And now you see these are hourly pivot points. What you can do is, if the price is close to the first pivot point on hourly, you trade to second and Bollinger Band. So your profit should be here or maximum here, 22 pips. Well, actually, it was made at this point here. Let's see. Yeah, but yeah, this is good entry here. A bit of, yeah, again, discretionary. The stochastic were above 50, so we can always put 50 line here. This is what I will do. Put a 50 line. It should be at least above 50. So here you see it's, well, it's subjective, but since this was a big push to the upside, probably retracement would be bigger. And here it is. Yeah, a lot of pips here. Now for stop loss, obviously stop needs to go above most obvious swing. That was made after the break of Bollinger Band. So here we are now again. Maybe this could be also, well, this is too steep of a trend line like this. Okay, this would be probably a short opportunity. Let's see if we see a breakout of next two candles to the downside, we'll probably get a short opportunity of this system. And stop will go above 1.1330, so it would be 1.1345. So guys, use it, try to demo trade it. And if you have any questions, if you need indicators, feel free to ask me for the indicator, I will send you. Chris will continue now. I hope that you enjoyed. And as always, we are here to help you guys. Cheers. Talk to you soon.
All right, thank you so much, Nenad. Sorry for that delay. I was trying to find the buttons there. All right, let's get rolling and continue with Heiken Ashi. Let me first of all share my screen. I'm going to show you my charts. You'll be seeing now the pound out, hopefully, and a daily chart. Good to see you, Caitlin. Good to see everyone here. Can you see the charts at the moment? Hopefully you're here and see me. You should be able to see some red and blue. Great, perfect. All right, so I think Heiken Ashi is a great tool. In fact, I'm also using the Heiken Ashi that you can find by just going to the yellow folder that Nenad was using, and you can find Heiken Ashi in that list. I also added a Keltner band and one moving average and an oscillator. So that's what you're seeing at this moment. I want to talk a bit about this one. I also show you a custom-made Heiken Ashi that I use myself that I find more pleasant because it shows various types of trend and range. Here you have only two options, red or blue. The one I use has a bit more gradients, which I think is useful. So I'll talk about that in a few minutes. First of all, this one though, I like it because it makes obviously the trend very visible and easy to digest and see. So core of trading is able to understand the market quickly, I think, use something that you enjoy using and make it simple. So Heiken Ashi for me does that. I like to use it, I like to look at it, and it makes things simple. So it's a no-brainer from my point of view, and it's obviously great for identifying the trend. So there are a couple of ways we can use that. I want to talk about that right now. One way is to basically use a higher time frame to identify the trend. So, for instance, we can say, okay, on the daily chart, if the Heiken Ashi is showing a trend, uptrend or downtrend, that's the trend I'm trying to trade, and I'll zoom into lower time frames to try to look for pullbacks and trade into that direction. Very simple. Use it as a trend definition. That's one way. The other way could be to look for trades using a combination of other tools. For instance, here with the Keltner, we can see that as long as, for instance, the Heiken Ashi are aligned with the moving averages here, the 140, this is a long-term moving average, 144, that it in itself gives an indication of breakouts and pullbacks. So for instance, here you can see when the Heiken Ashi is turning from red to blue, we have price moving back to the long-term moving average. We have price bouncing off the bottom of Keltner. But that could easily be in itself a pullback. And as soon as we get a blue candle, that could be a good way to trade the pullback basically within a trend. Okay, so we can use the moving average as a trend. We can use basically the pullback to the Keltner as a pullback, a retracement, and then the switch from red to blue as a continuation. So again, trend, pullback, continuation concept here. Here's another example, right? Trend basically moving away from the moving average, pullback to the Keltner, and then we get the blue candles right here twice, indicating the continuation eventually. All right, so those are a couple of examples how we can use Heiken Ashi as a pullback, even on one time frame without having to zoom in necessarily. But of course, we can use these pieces of blue here, and that's what I'll show later on, to zoom into a 4-hour chart, for instance, and try to catch some trades within that piece of momentum. All right, so what I was talking about was basically the start of a new swing. But once the swing is on the way and it's going, into the direction of the trend, we could zoom in and try to catch or scale in or catch extra trades into that direction. All right, so that's how you can basically look at this chart. Now, you can also even look at reversals. Once it hits the Keltner band, eventually it will typically make some kind of retracement. Not immediately, though, as you can see, it rides the Keltner band for a while, but eventually we do get some turns. You want to be careful with reversals, though, and you can see that once you get some red candles, that eventually you do get a bigger retracement, but it could take a while before it happens. You might want to have divergence first. Typically, that's when you get more or better retracements. But you want to be careful because sometimes you get big pushes like this, and there's no retracement coming at all. It just keeps pushing, pushing, pushing. So you definitely want to time it well, and you want to have good reasons to look for reversals. Typically, good reversals are not, they happen less often, less regularly. You want to be more critical and really have more evidence that a reversal is going to happen. They do happen eventually. We just tend to, expect them way too soon, and we kind of get bitten. Let's say here we try to take a reversal, here we take a reversal, here we take a reversal, and all 3 times it doesn't work out. We give up, and then the 4th time it works out. So it's Murphy's law. So this is always the difficulty with reversals. So just to give you another example, here basically you can see price riding along the Keltner, and that sometimes happens too. Once it starts riding like this, it can keep pushing here too, as you can see. So sometimes you don't even get the pullback, a deeper pullback actually to the top of the Keltner. These are breakout scenarios. In fact, when that happens, it could be tradable even on this time frame. But then I like to use Japanese candlesticks, not so much Heiken Ashi, if price is riding along the Keltner like this, it is good to look to lower time frames though and catch momentum continuations. All right, so we talked about a couple of things, reversals here, be careful. We talked about pullbacks within the trend like this, but sometimes it doesn't happen. You get just continuous pushes like this, and in that case, I think it's better to look at lower time frames. So by using these tools, you can basically try to understand what is the best type of trade on what time frame at this moment, right? That's what I'm trying to always do, is hand you out tools that make you kind of understand the market better, that empower you to understand the market structure. And I try to do that in a way that you can always kind of get a higher understanding of what's going on. So, from this point of view, I think that obviously it doesn't cover everything. There are spots in this chart that these three things do not cover. For instance, here you get a mediocre or kind of a lighter pullback. Let me say this way here too. So that not necessarily. But let's move on and let me take a look at my Heiken Ashi that I use right here. All right. So this is 5 colors, or maybe even more. No, 5. Yeah. So you got green, 2 shades of green, 2 shades of red, and a gray. So obviously gray is neutral. The shades of green indicate strong trend, light trend, upside, and downside. So light green is strong upside. Dark red is actually strong downside. Light red is retracement, and light green is retracement. Sorry, the dark green is retracement. All right. So that in itself already gives us a bit more understanding of what's going on here in the chart. I think that's why I prefer this one. I like it because it just gives me already more information about the strength of a trend, or the lack of a trend, in fact. So what I use it for is when the color switches, obviously, from gray to green, or from gray to red. That would indicate a trend change. I also use it for light, basically within the trend. If you have a switch from dark to light, or from light to dark, you can basically then in that case understand that there was a pullback. All right, so that's how I use it for down as well, from dark red to light red, back to dark red. So in this case, let me zoom in like this, and you can see right here that this was light, this turns to dark, back to light. So that's the pullback. These are pullbacks basically here too, right? These are the pullbacks within the trend. And once it gets into gray, that's basically when we lost the trend. And then we go back into, actually we go reverse into green. So it turns out to be a reversal actually to, and there's another type of gray, actually there's a certain light blue gray. So there are 2 types of gray in fact. This one is for free for you. It is typically not something we offer for free, but if you're watching this webinar, we will give it to you for free if you send an email to, I have it prepared. Let me think where I had it. I had it somewhere on the chart, but now I don't know which one it was. Well, doesn't matter. I don't want to waste time looking for the chart. So let me write that down. There you go. All right, so if you're watching now, you can either copy it, I wrote it in the chat. If you're watching a recording, you can pause it, obviously, and you see it here in purple, this email. That's where you need to send an email. Quick, short email, put in the title Heiken Ashi, and it should be fine. So that's the basic explanation of it, of this this tool. Yeah, I definitely think it's I enjoy it more than the regular one. I think the regular one is, you can use it perfectly fine, as I just showed it with the calendar and the moving average and the oscillator. You could perfectly use it as well. This one gives me more info quicker. So what I also like to do is add moving averages. So this is how I look at it. On different time frames, I would have different moving averages. So you can see here long-term moving average and a short-term moving average, basically. And it indicates just if not only are the candles red, but are they below the long-term moving average, and you got a strong trend. If you got red candles, but they're above, right, here like this, that could be still a retracement, and you're not sure if it's actually a reversal or a new trend to the downside. That's basically the difference. For instance, here you got red candles, but it was not a decent retracement, but not a full reversal, because price still made a push up here too. Red candles, price is still above the long term, made an actually substantial move up. So that's how these moving averages, which is also for free if you like the moving average indicator, go ahead and add that in the email because I'll send that too, gives me a great trending overview quickly. So let's take some examples here about how to potentially trade it. The settings on the EMAs are basically, I'll send that to you. If you send me an email, I'll send the exact settings. Basically here quickly, here I got 169, 100, and this is 144, 100, and this one is an 8. On the lower time frames, I also add 21 EMA, high and low, and sometimes a close. If you think the close is too disturbing because it's too much information, you can take it away, and then you have a bit more less moving averages, which makes it less clustered. All right, so basically what is good to do, first of all, and I will go point by point through the ways I use it. First of all, is just using this chart, one could look for pullback continuation. So here's the trend, this is the pullback, and we got continuation. You got lighter pullbacks too when it switched to red like this, all right? But the better ones are if it does switch to gray or green, because then you have a bit stronger retracement available. All right, so all these are pullbacks. Now, once it switches back, right, those are areas where you can start thinking about taking shorts. All right, if you get a clustering like this, it's not good to take all of them, obviously. You want to be smart when you take it. You don't want to over risk, as Nenad also mentioned. But those are spots where you could take it. Light red is risky because it might still push through, but it could be also a bigger retracement. So those are typically a bit more riskier. It's possible too. I'm just saying it's riskier, and you might want to have more evidence of a follow through on that. All right, so that's one way: pullbacks and continuations. The next is zooming into basically lower time frames. All right. Also, by the way, before I do that, if you lose the momentum, you could get also a reversal. By the way, this is risky as well, obviously. But if you lose momentum here, that could be the first sign of a reversal. You got to have, I think, definitely some substantial and extra analysis that shows that there could be a reversal up in here. Maybe a very strong fib plus some pivot, some strong resistance, like horizontal levels, anything you can gather well, not everything, but the tools you usually use, and they show confluence that could be another way of using it as an indication that momentum is over. All right, so that's another way to use it on this time frame. All right, so other than that, once there's momentum, you could use it, of course, to zoom into lower time frames. So when there's a trend going on like this, you can try to catch extensions within this part, and all of these parts, in fact. So let me put some horizontal lines here, some vertical lines. Let's do that recently, so we don't have to go too far. All right. So once we have a trend here, basically same scenario. You can look for a pullback. If you see a lot of struggle like this, for instance, that itself already could be maybe a reason to take the trade. If you got a good trend on the 4-hour chart, I would not say that this is a good trend, so I wouldn't be thinking about that. But on the red candle here too, again, you could be thinking about taking a short if the candle's not all too big, and looking for a follow through to that. Let me see if I can find another example where we do have a trend present, maybe here. All right, let's go there. All right, there we go. Yeah, here we do, for instance, here this is a trend. Why? Because the moving averages are separated. In the previous example, they were glued together. So in this case, just quickly look. Yeah, I was saying that you had wicks here, so that could be if you have a trend, the wicks itself could be already retradable. The retracement here, in fact, but this I wouldn't use with Heiken Ashi. I use candlestick patterns for that. I don't use Heiken Ashi. But the Heiken Ashi change, though, is a good confirmation. We can look at the candlesticks very easily by changing the view here, and you'll see how they look like. So as you can see that this is a bearish candle. That could be already a good one. But the next one is actually the confirmation on the Heiken Ashi. Plus, you got a good candle close near the low. You don't see it too well, but it is. That candle clearly breaks this trend line. So that definitely is a good breakout candle from various reasons. After the retracement, within the daily downtrend, moving average is separated. So yeah, that's a great basically trend pullback continuation trade on this 4-hour daily combination. So that's how you can use it. How you can use the Heiken Ashi versus in combination with the moving averages. Takes away the bias. I mean, every time we make an analysis, we do create some kind of bias automatically. That's why we have analysis. When we do analysis, we say, okay, I'm looking for a long. That becomes a bias. But we need that. If we don't have a bias, we'll never trade, right? So we need to have some analysis that guides us. But ultimately, we don't want to get too overly stuck to that. We want to keep flexible in our approach and always be open to a reasonable, being reasonable to accepting change and accepting that our bias, our original analysis might not develop. This is often where we get stuck. We don't know how to handle that because we either change too quickly or we change way too late. And that's why it's so difficult. That's why set and forget strategies sometimes are easier at the start because we don't have that problem to deal with that. But I think if you want to go to a level where you get more out of your system, a trade management is better, and then we bump into these problems. So I think that Heiken Ashi is a great way to keep our kind of focus balanced and not get too kind of too scared about the start when it's maybe not going our way, but maybe not overly tied to a trade if it's eventually after a while if it doesn't go our way, where we should actually be more cautious. All right, so I've talked about this more often, so I don't want to elaborate too long, but this keeps us. I think what I basically want to say is the Heiken Ashi is great to keep us on track and keep our bias as small as possible. All right. Now this we can do continuously in a way because it allows us to basically choose the time frames that are trending. for instance. If you like trends, you can do that with this. If the daily is not trending, like the euro dollar, for instance, weekly is not trending, we would skip that. Not interesting. But the hourly could be trending, and it was. We talked about that multiple times on Monday, Tuesday, Wednesday in the live webinars. How here was a setup, here was a setup, and here was a setup to the upside. All three to the upside, and all of those trades are working well and have worked well. So that's why, because it was trending on the euro dollar lower time frames, right? We got clear upside, moving averages aligned, space between the moving averages, Heiken Ashi is green. So every time this pulls back and continues, boom, boom, boom. And even the 4-hour chart, everything was aligned. So we got trends on the lower time frames. We didn't have it on the weekly and daily, but we did have it on the lower time frames. So what did that tell us? That gave us the information to skip higher time frames and trade lower time frames. And that's great. It kind of leads us to what pairs are interesting, what time frames are interesting. So that leads me to show you this chart where I have basically the Heiken Ashi trends summarized for myself in a neat table here with various pairs and various time frames. So I got a quick overview. Okay, boom, I can see. I don't have to scroll through all these time frames and pairs. I got a quick overview of which are trending. Obviously, the dark blue and the dark ones are the trending ones. The lighter ones are retracing, and the grays are neutral. That's a big help for me in the morning. I spot the ones that are interesting for swing trades. I spot the ones that are interesting for intraday, and I then go to those pairs and time frames and analyze those. That saves me some time in running through the charts from start to finish. So this table is basically giving me a summary of all the Heiken Ashi candles, if you see what I mean. So here you have the pairs, and here, this is custom made. So this is something we made for our own trading, and it's part of it's part of what we call HARP system. And so HARP is actually Heiken Ashi, right? That's the H and the A. And the Heiken Ashi is part of the system. This is part of the system. So no, yeah, indeed, not really. But we can figure something out. I mean, I know it's annoying to show something that is not. So we'll figure something out. Just send me an email if anyone is interested. Okay. So, but this is useful for us. Now, what else did I want to say? Let me think. Got a bit distracted here. Oh yeah, lower time frames. So what I use with lower time frames. Yeah, exactly, Kate. I know what you feel. So anyone who's interested, just write an email. Because I understand that. So yeah, lower time frames. I add on lower time frames. I like the 21 EMA band. Now I don't necessarily use it on higher time frames. You could, by the way, on the daily too. No problem with that. But I know that not everyone is very interested in having a ton of things on their chart. But what I like to do is also add a 21 EMA band because it gives me information as well about the intermediate trend. So what basically happens is it's a good resistance spot, but if price breaks above it, there could be a good reversal trade too. So it gives us information. The long-term moving average is great for trend, right? Price moves away from it, great. Then hooks back to the short-term, often resistance, continuation, right? But sometimes it will break above the short term. And as you can see, once it does, there's sometimes the opportunity for price to go back to the long term, in fact. If it breaks eventually above the long term, then we get a trend change, of course. So you can use these moving averages to understand, is it trending? Is it reversing or is it retracing? Is it retracing back to the short term or to the long term? So you get a good feel. Is it breaking out? Is it trending? Is it the light retracement? Is it the strong retracement? Or if it's reversing? So a few more examples here, for instance, or ranging. All right. So this is a range. All right. This is a breakout here. This is a deep retracement. This is a deep bounce, actually, bounce off those, right? So here we have clearly breakout, and here we have lighter pullbacks and a strong breakout momentum, in fact. Here we got light retracement, strong retracement. So yeah, each of these situations is basically tradable depending on your preferences. You can custom adjust it to what you like. Now, this is something that I often talk about, and I personally think it's the best because you can then choose how you like to trade the most. But if you just in general like trend traded, then you would skip these parts to the upside. You would skip these parts to the upside, and you would wait for price to go back down and take the trend trade. All right, you would skip this. All right, so if you like ranges, you would be looking for this. All right, so that depends on your preferences. You know, from my perspective, I like trending trades. Sometimes I do take a reversal though if everything is well aligned and I like my analysis and I think there's a good chance. Like I don't have many examples, but pound odd, for instance, a long time ago already. Here, up in here, I was trading it. No, sorry, somewhere here probably. Wasn't it? Here, I think it was. Now I don't even remember. I thought it was. Maybe it was a 4-hour chart. Hang on. I don't even remember where it was. You can see I'm not a big reversal trader because I don't even remember where it was. All right, doesn't matter. But I like breakouts, momentum, pullbacks within the momentum. So yeah, that wraps it up. If you're interested in knowing more about Heiken Ashi, check out this article with more info. I'll send you the link right now. It explains Heiken Ashi and how you can download MT4 Supreme Edition. MT4 Supreme Edition has a lot of extra things, like this mini terminal, like this Keltner, for instance. So check out that article that's dedicated to Heiken Ashi. You can also check out more webinars, of course, by going to Education Webinars and sign up for more webinars next week. Plus, you can, of course, check out all the things that you would like to regarding WebTrader trading platforms like Supreme, Education, and Analytics in general. So by all means, feel free to discover this website. There's really a lot of things here, so feel free to do that right now. I don't see any questions, so hopefully everything was clear. If you have any questions, though, feel free to use the email or Twitter. And well, hopefully see you next week. Hopefully we'll get some good trades again, like this week. And wish you all a great weekend. Cheers, everyone.